Hey, this is June from Turning Point Life Investment, and this video is for the week ending in March 14th, 2009. So the question is, did we hit the bottom, or is this just another bear market rally? Unfortunately, I'm not able to answer that for you because, frankly, I really don't know if this is the bottom or not. But as traders, what we can do is figure out, okay, if this is the bottom, then how do we trade according to that? And if this isn't the bottom, then how do we trade in preparation for that as well? Okay, so that's the thing as far as being a trader is concerned is we're not here to try to call bottoms. We're not uh, trying to be right all the time. But what we can do is prepare for the different scenarios, different possibilities that might occur when the market does present itself. So looking on the 3-year weekly, this is a 3-year weekly view. Notice how we had a nice bullish engulfing pattern. Typically, that is a reversal sign, a bullish reversal sign. So we can get some kind of follow through. Most likely we will probably come back and tag this 20-week moving average. If not, then critical support right here will be right underneath this bullish engulfing pattern. I have also mentioned how before we're going to see some kind of divergence, and which is very apparent right now. And this is some pretty significant divergence where the market made a new low, but the MACD is very weak compared to the previous peak. So even though we don't know exactly if this is the bottom, what we do know is that we're much closer now to the bottom than ever before. I'm sure if we look back a few months later in the future, we can look back and say, oh, duh, pretty obvious, right? That was the bottom. But honestly, as far as being 100% certain, I don't think anyone can really say with 100% certainty that this is the bottom. So what do we look for? Okay, so going into a 6-month daily view, I would say if here we go. This 50-day moving average has been pretty much the major resistance barrier for this entire market ever since the decline. Okay, notice how it's unable to trade above the 50-day moving average other than here for 1 or 2 days. But if this market is going to turn bullish, I would love for it to see it trade above this 50-day exponential moving average for at least a good week or so. At least that will clue us in that, okay, now we have a possible change or shift in momentum, and this can possibly start looking more like a bottom. Okay, but here are some conflicting information. Notice how volume, even though we had a nice decent rally, volume has been below average. Okay, so that's a clue to that this is possibly a bear market rally. If the market does break below this low right here, that's pretty much our confirming sign that, okay, this wasn't the bottom and the market can probably head lower from that point on. And being where the 50-day moving average is, I would say 80 would be the next critical support level, resistance level. So if the market can trade above here on this area, then I would say we would change our outlook and possibly say, we have a short-term uptrend in progress. But if the market breaks below this level, then we know that with a good certainty that this bear market will resume. Let me zoom in a little bit. Notice how on Friday we ended with a doji candlestick. Okay, another sign that this is a possible reversal clue right here. Just like how we had down here, we had a couple of dojis and then we had a nice decent rally. Okay, so when it comes to knowing where, when, and how to apply your candlestick patterns, it's really important. I mentioned last time that even though we have a very nice downtrend, when you see these reversal candlesticks, it apply more after a nice emotional move like this, as opposed to somewhere in the middle where there's no trend. You have to understand the definition of a reversal candlestick is it's got to reverse an existing trend. If you see a doji or a hammer or whatever it might be in a side trend, well, you have to think, what is that going to reverse? You can't reverse a side trend into even being a more side trend, right? All right, so the key is once you see some kind of reversal candlestick, make sure that it comes after a nice decent trend. So we have a nice candlestick right here, reversal candlestick doji, after a nice 4 or 5 days rally. So if that means anything, we can possibly see nice decent pullback next following week. Next, we go into the VIX. Okay, so notice how even though we have a nice rally this week, we are still above this 40 support level. Okay, so this is going to be a pretty critical support level for the VIX. If it breaks lower, then we know that the market will probably start turning more, will have a better bullish outlook. But if it stays above this 40, we can expect this bear market to continue. But one thing that's fascinating about this VIX is that despite the ups and downs that we've been experiencing, the VIX has been in relative relative side trend, no extreme highs and no extreme lows. But once again, we have to watch for these levels. We're not trying to predict what's going to happen. We let the market tell us what's going to happen. So if the VIX decides to drop lower, then we can expect a little more bullishness to come back into the market. However, if it breaks above this mid 50s area, then we can definitely expect more bearishness to come for the market. So overall, just to recap, really watch these levels. If the 80 level, if the market's able to trade above this 50-day moving average, then we can start looking to more bullish trades in the market. However, if it stays underneath it and it trades below and breaks the support, then definitely the market, the bearish market, is still in full effect. Overall, as far as next week's concerned, we can expect some kind of little bit of pullback because you have an entire week of rally, so we can probably see some profit taking going into next week.